Hi everybody. Well, we've had a wobble in stock markets thanks in large part to the US and China hitting a roadblock in trade talks. The Japanese yen's done well thanks to its status as a haven currency, and Bitcoin is back above $6,000. But before we discuss all that, I will just go over some of the major economic and corporate results for the week. So from an economic perspective, you can see on the displayed screen, I'm going to highlight and discuss in a bit more detail the UK unemployment, the Chinese data, and also this Australian federal election in a bit more detail just shortly. From an earnings perspective, well, we've got earnings from the big Chinese tech firms, Alibaba and Baidu, and we've also got the high-flying cannabis stocks, Aurora and Tilray, reporting as well. Now, with these alternating headlines about the likelihood of a Conservative Labour Brexit deal, that's been pushing the pound around mostly lately. So this week we have labour market data from the UK. As of last month's data, we sit at the highest level of unemployment in the UK since 1969. So growth may not be through the roof, but the economic situation is pretty strong. And so it just goes to show, just goes to re-emphasise how undervalued the pound is, especially against the euro and the yen because of Brexit. Now, depending on whether we have a US-China trade deal in place or higher US tariffs on $200 billion worth of Chinese imports will affect not just the overall market sentiment next week, but also how much weight we put on these retail sales and industrial production data from China. My take being that if tariffs do go up, for me that means negative pressure on the US indices, and from a data standpoint, the strength of China's economy matters more because it needs to be able to withstand that attack from the US. The Aussie dollar's gone through a bit of a rough patch, I think mostly because traders use it as a proxy for the outlook on China, but the election this Saturday is also a factor. So Australia are setting up for their 7th Prime Minister in 12 years. So there's basically been no political stability in Australia for over a decade, which does make me laugh when you think that actually Australia holds the world record for the longest period of growth among developed economies. That's 27 years and counting, including these past 12 with the political turmoil. So obviously hasn't had that much of an effect. But I still think probably the normal election dynamics probably apply here. So a victory for the left-leaning Labour Party, who are ahead narrowly in the polls, would probably be a negative for the Aussie. As we alluded to at the start there, US indices, we've basically had a false breakout in both the S&P 500 and the NASDAQ, and the makings of a triple top in the Dow Jones. Now I'll go into the charts in a bit more detail in Monday's webinar, but my reading of the situation is that we've recovered too far, too quickly from the sell-off that we had at the end of last year. The rally we've had this year so far has been so large that it beggars the question, what justifies it? Obviously, we've had a flip in Fed policy. We've had better language to date about the trade war. And actually, as it turns out, US earnings are not quite as bad or haven't declined as much as analysts had previously forecast. Yet still, with the strength in the market, I think every year you get analysts asking the question, should we sell in May and go away, like that old adage? Well, my take being this year is that given that the gains that we've seen in these first 4 months are more than you'd expect it to see in the typical entire year, and the fact that we're in the latter stage of a 10-year bull market, there's clearly a couple of major big reasons, or incentives at least, to take your money and run in May and look back to enter the market at perhaps a lower point. That's clearly going to be on some people's minds, and it's a downward force on the markets. Obviously, we've got news to deal with and the momentum, which is all positive to date. Now, if you're a Forex trader, rather than the indices, you'll have noticed the rally in the yen this week. We're anticipating that the rally gathers steam, so that would be the drop in dollar yen and euro yen picks up pace in the case of negative news surrounding the US-China trade war. So namely, if Trump does raise tariffs, you'd expect dollar yen and euro yen and Aussie yen for that point to trade lower. Last but not least, Bitcoin back above the 6,000 mark. From a technical analysis point of view, 6K was support for a long time when the price was on its way down. Now it's resistance on the way up. So logic follows that if price does hold above 6,000, then that's bullish for future price moves. From a news standpoint, it's actually not been so good. This $40 million worth of Bitcoin stolen from Binance does undermine or does put at risk the confidence in how secure these crypto exchanges really are. On the face of it, going up on bad news is normally quite bullish for a market. My biggest concern is that Bitcoin prices at the moment are being churned. That's where big holders make large transfers between each other and make the market look more active than it really is. It's a form of market manipulation, and one bit of evidence to suggest potentially that's what's going on is that we've seen much bigger price moves in Bitcoin than the other crypto markets. So the likes of Ethereum, etc., not seen the extensive moves that Bitcoin has. But it may just be that Bitcoin is the market leader, and so it needs to rally the pack out of this potential bottom in the market. If it is the case that Bitcoin is being manipulated higher, then the question is, well, what level do these big holders want to sell out at? It doesn't look like it's 6,000 at the moment, but it still could be. So whether we hold above that 6,000 will be the most important factor going forward. Thank you very much for watching. Good luck trading this week. And if you want to see these videos as soon as they're released, please follow myself and LCG on YouTube and social media.